Hello and welcome to letmebefree.com. In this video I want to give a brief introduction to Zone Trader. This is an expert advisor that we use with MetaTrader 4 to help us identify turning points in price and high reward, low risk opportunities for trading the foreign exchange markets. Zone Trader is an extremely powerful tool. It can be used by complete new traders or by very expert traders alike. It can be used in a manual way or fully automated, and it can be used for short time frames such as the 15-minute or much longer time frames such as the daily or weekly. The key secret to Zone Trader is its ability to identify zones of either supply or demand on a chart. It then allows you to quantify the strength of these zones using a whole range of parameters and to develop complex strategies based around these zones. You can then turn on automatic trading to actually trade against these zones while you sleep, and you can have complex exit strategies such as using trailing stops, such as when it hits a opposing Bollinger Band or when a trend changes. There's absolutely no limits on what you can do with this tool, and I think you'll find it extremely powerful when you start using it. To start using Zone Trader is extremely simple. Having installed it in your MetaTrader terminal, you simply go to your navigator window, find the expert advisor, drag it onto your chart, enter some authentication details which you'll be provided to when you subscribe to the service. I'll just enter my license key here, press OK, and you'll get the very first default settings for Zone Trader. Straight away you can see how good these zones are even on this one chart. Whereas down the bottom here you can see where price has come down to the zone, touched it and then left. This would be an opportune moment for a long entry. The main principle that Zone Trader uses is to be able to find turning points in price where there's an imbalance in supply and demand. If we just take a look at this top zone drawn here, we see price has come up to it, traded for a little bit and then dropped away suddenly. This is because at this point here supply and demand were in balance, but then there became an excess of sellers and they had to look for lower prices before they could complete their transaction and find a buyer on the other side of the market. Not only does Zone Trader try to identify the zones of supply and demand on a candle chart, you can do this across all time frames for that chart. So simply by looking through different time frames, we can see the areas of supply and demand. In this weekly time frame, we can see prices come up, just touch this weekly supply zone and then it's dropped away from it. And there's a good chance that price will continue to drop even further from here. Of course, sometimes it's a bit of a nuisance to swap between different time frames to see these zones. So we have various settings in Zone Trader which will allow us to change how these zones get presented. For example, we could say we only want to see zones for the current time frame with those from the daily time frame on the same chart. So we change that setting and you'll see the daily zones appear on the same chart as the 1 hour in this instance. Go down 30-minute and the daily zones go up, the 4 hourly and the daily zones. So we can combine these zones and charts in any way we want. To give you another example, we can simply view all higher time frames zones than the time frame you're actually looking at the moment. So instead of saying parent with the daily, say parent with all higher time frames. Now this will get a bit cluttered, so we don't normally do this, but just to give an example of what is capable. So here we have the weekly, the daily, the 4 hour zones. Scroll down and we get more. We also get the 1 hour on there. Go a little bit further and we start getting 30-minute zones as well. As you can see, this can make it a bit cluttered, but can also be extremely helpful if you configure it exactly the way you want. My favourite way of doing this is to display the current chart with just a one higher time frame set of zones. So parent one higher time frame. Here we have it. So we have the 30-minute and the 1 hour. Go to the 4 hour, the daily, the weekly, and here we can see, as I referred to before, it touches weekly zone, it's dropped away, it's formed the daily supply zone. So we can quite happily expect that next time it comes up this supply zone, it will continue to drop further down, maybe towards this daily demand zone further down. So at this point in time, I just want to maybe go through a few of the different time frames just to give you an idea of how well these zones can actually work in identifying areas of supply and demand. So I'll start in the monthly. You can see you have two zones here. You have one nested with another. So starting at this one, you can see prices come back to it here, rejected. It's gone a little bit further in, creates another zone. Again, we tested this zone here and then left off right up to the high side. Go a little bit lower down to the weekly. You can see on this trend where it's recently taken off, left above it, come back, test it, and then left. Here, closed above it, quickly come back to test it, and then taken off. Look at this one here, it's left there, and then touched it. We tested the zone just here. This one is left, it hasn't come back to it yet, it may well do that at a later stage. This one here again, it's created another zone, it's come back and tested it. Moved on up until it's hit this zone up here, tested it, and it brought it to a halt and rejected it. And there's a good chance it may well fall from here. We now start looking down at some of the smaller intraday time frames, such as the H4. Let's start down the bottom. We've got a whole lot of noise going on at the bottom where this H4 zone has formed and created a bit of support for price. It's not come below that. It's tried a few times but it hasn't been to come below it. It's left the zone here, it's come back and tried to test it, taken off again, come back, try this new, test this new zone, taken off, created new zone, and then come back and test it, taken off, come back and test it, taken off. See, it's come all the way back down here again and retested the zone all the way down here and literally rejected it straight away. And what this really emphasises is how at previous turning points in price there's always going to be a surplus of orders left behind. So here price came down and left, there's always going to be remaining buy orders left at that point in time, because the only reason it left is because there's too many buy orders for the number of sell orders. Therefore the buyers had to go looking for sellers at higher prices. There'll be some, the institutions, they can't chase price, so they'll just have to wait there until later in time, until price comes back to it, and it inevitably does at some stage. In this instance it came back here, it found those remaining buy orders, and that's what's caused this delay in price. Now we don't know whether this is going to send price back up or whether it just keep it paused, and that's what we really need to determine, is how strong or how many excess orders there are waiting at this level. And that's where this tool really comes into its own, because they have a whole load of parameters which we can use to determine the strength of these zones and how far we think price may get rejected from them when they come in touch, or even if a whole new trend is like to start. Before I start looking at some of the parameters we can use, I'll just go down a couple more time frames. So firstly to the hour, here you can see where prices come back, just touched that zone there. It's actually gone through the hourly zone a little bit, just touched the H4 zone, often when you get these nested layers, then it's the second layer, which is the one that manages the stop price. It's rejected price. It's coming back to try again, but it's still being rejected. So they're very powerful, these zones. Go around one more layer, H30. Again, this time on the downside, that downtrend you've just seen, where it's come back to touch the 1 hour zone. You can see these H30 zones form on the way down. A great big gap there at the weekend. Then price came up, retouched that zone, and then fell again. Similarly here, it's retouched this zone here, and then fallen again. It's closed down here, can retest the zone, and then fallen down all the way down till it's touched this historic 1 hour zone, which is what's halted its path, as we saw on the higher time frame just earlier. Okay, so now we've had a quick look at the general way in which these zones work. We'll just give you a brief overview of some of the parameters we can use to actually filter out these zones a bit and get the ones that are the most reliable and then give us the best opportunities. So here under zone filtering, we have a number of parameters which we can set. So just reading through them, score is actually something that I've determined within the program, which is based on most of the other parameters contributing towards that score. And the higher score, the more reliable that zone is. We'll probably do a separate video on that at some stage in the future. Retests, where we can say that we only want to have one retest. Now there's a separate video on retests which explains how they work. By default it's left at 99, which pretty much says that you don't care how many times it retests it, but in reality you may well want to reduce that down. The penetration, we have at the moment we're allowed 100% penetration, after which the zone will be stopped out anyway. But we may want to reduce that so that we don't want to consider any zones which have already been penetrated by at least 50% of its depth. The bias, that allows us to say whether we want to consider only demand or supply zones. We can set our bias manually or based on the current trend on a different time frame, or based on the current trend of a higher or higher time frame or the one we're looking at. So there's various different modes there: manual, select time frame, current time frame, higher, or the next higher time frame. Okay, just looking forward down, we've got things like the zone size. At the moment it's 99,999, so we can pretty much take any zone right up to monthly time frame. We could reduce that, so just give a quick example of one of these things, how they work. We have here a zone, 4 hour zone, which is roughly about 65 pips, 66 pips, and we have the H1 zone, which is about 56 pips. So let's say the maximum zone size is going to be 60 pips, and hopefully the 4 hour, if I've measured it accurately, should disappear. So maximum zone size 60 pips. Give it a second to recalculate. And there you go. 4 hour one disappears, leaving the slightly smaller H1 there. We'll just make it a little bit bigger, so maybe I get to 70 pips, 75, then that H4 zone should come back. And there you go, you can see one also appears down the bottom here. So that's just one way you can filter our zones, as well as the bias. We look down, look at how many candles have formed since the actual zone formed. So we can hear this is a zone formation when the first closed below that level. We've had 1, 2, 3 candles there. We scroll to a different time frame. You see this one, there's a lot more candles formed. We have to scroll all the way back to here to see how many candles there's been, or even further actually. This is where the zone first started, so there's a lot of candles. We may only be interested when price has only just left the zone. So in these instances, maybe where there's been a quick retest. So that's where that might come in useful. Continue down, looking at some of the other types of parameters we have. The candles since the price was last at that level. Overlapping zones is an interesting one. That's basically looking at a time frame and looking at where we've got two overlapping zones on the same time frame. So I'll see if I can find a good example of this. On this particular chart, unfortunately, here we go. We've got two overlapping 4-hour zones. So by turning that parameter on, then the inner overlapping one disappears, and then consider the outer overlapping zone. The overlapping zones, turn that to true. Okay, and we'll see it disappear in a minute. There it goes. So now we'll only be considering this zone for possible trade entries. Let's keep on going down and maybe find a few others. Let's just deal with the penetration. Let's say, for example, we're going to look at so here we have a 1-hour zone which has been penetrated. It's closed below. It's probably come up to about just about 50%. There's this one closed below. It's probably only come up about 30% there. So we 40%, then this one should probably disappear. So first the penetration about 40%. Watch what happens to these pink 1-hour zones, if I've measured it correctly. And there we go, top one's disappeared because it's had more penetration into it, more than 40%, whereas the bottom one is left there. It's only really gone to about 30%, just looking at it visually. Okay, so that's a few examples there. I'll put that back to 100%. Let's go down a little bit further, but I think we're getting an idea of what we can do. So nested zones, we can exclude a zone if it's not inside a 4-hour zone. So generally this will always apply to zones which are going to time frame less than the 4-hourly, obviously. So let's see if we can see a 1-hour embedded into a H4 zone. In H1 zones, so I'll just change the setting to display the H4 zones as well, or the higher time frame zones as well. Now this 1 hour is embedded within the 4-hour zone, this one isn't. This one is overlapping, so it's really considered as embedded. So let's focus on this one up here because it's nice and easy to see, and it's a great example. So this one should disappear, this one should remain. Look for the nested zone, entry not inside H4, not to true, okay, let it refresh itself. See, this one disappears because it wasn't inside an H4 zone, whereas this one remains. So as you can see, there's a lot of different parameters we can set. I'm not going to go through them all in this particular video session. However, I do want to say that what you can do is once you've set these parameters, you can actually save them as different strategies and then turn auto trading on so that the expert advisor will place orders against these zones automatically without you needing to do anything. And that includes position sizing, and then it will also manage them using trading stops if you require. So here you have your auto trading, turn it on, you can say which zones you want it to trade against. So we're only interested in 1 hour zones, so maximum 1 hour minimum 1 hour. So now it will place orders. Once you place that to true, cat fingers, true. So if we said OK there, it can start trading against these 1 hour zones that you see on the chart. That's after you've built them using your own strategy. Scrolling down, we've got a few other criteria. For example, you can say the maximum number of trades or orders per zone that the EA is allowed to create, maximum allowed per symbol, maximum allowed per time frame for each symbol, maximum open trades each day, maximum losing trades allowed in a day, maximum winning trades in a day. So there's all these different parameters which you can set, which controls exactly how the EA will trade for you. You can also bring in Bollinger Bands. So for example, you can say only place a trade if you're inside a zone and you're outside of the Bollinger Band, so at an extreme in price. You can also use the CCI index. So for example, if it's over 100, then you can take to sell. And there's a whole load of other things we can do. Maximum retests allowed to trade. So even if you have zones for that being retested 3 times shown on the chart, you can still restrict the trading to only a trade or place an order on the first retest. Just moving down a bit more, you have permitted trading time, so you can actually say you only wanted to trade in the Asian session or the London session or New York session, for example, and exactly which hours you're allowed to trade. We have position sizing, so that you can say whether you use the fixed lot size or you actually calculate a risk based on your account size or on a fixed capital value. And you have some different exit strategies, so you could exit the trade as soon as price hits an opposing Bollinger Band on a specified time frame, as soon as any retracement is detected on a specific time frame, or you can also close them at the end of a session. So say you could close all trades at the end of the Tokyo session, at the end of the London session, and at the end of the New York session. And you're just looking a little bit higher, you've got things like trading stops, so you can basically tell it to move stops behind new zones as they form behind price. So if a new 1 hour zone is formed, then it will move this, it will use that as a protective buffer and move the stop behind that zone if you have set this set to H1 and trading stops set to true. I'm just going to cancel that for now, so I don't want to go do any trading. What I do want to do though is quickly show you what's going on at the moment. I've deliberately had this hidden until now, but I've actually had this trading on a VPS that I have running, and if I go here you can see just some of the trades has come out. This is just a demo cam just to give you an example, and there's a lot of trades being opened and running. So we've got a couple which are kind of round about break even. We've got some which are in a profit by quite a lot. So we've bought the yen, we're selling the pound against the Aussie. It's going down, we've got some buying the pound against the yen which are in profit. And we've got a total profit of $330 odd today, that is, on an account size of 4,600. And just to prove that this is today, if you look at the account history, I'm just going to say custom period today, okay, let it do its thing, and see these are all for the 22nd. Scroll down and let me see there's no losses in there, there's no win trades at the moment because none have been closed off, but these are all just orders which have been placed automatically by the expert advisor and then cancelled if price hasn't come back towards it and started moving away again. So there you can see how the automatic trading is working. Just quickly coming back, you can see in the comment, it gives an idea of what time frame it's trading against, the ID of the zone, the unique identifier for the expert advisor being used, which is set at top here, and also which retest is happening. It's got a few more orders here, so we've got another one buy for the yen. So we quickly look at the 30-minute yen. Just apply the no criteria at the moment, so we get all the zones. And you can see that there's, I have to quickly show the trades so you can see what it's done. You can see it's basically wrapped it around this here, so a little bit bigger so you can see this zone here. Use this. It's basically wrapped a trade around that particular zone. It's a demand zone, so it's a buy trade. I'll be looking to enter whenever that comes back to touch it, hopefully to kick off again and go upside. Now we do have a zone here, and there's a risk that that could stop progress any further. We'll have a look, but generally speaking you want to trade with the trend, and it's really higher time frame zones that you're looking for to stop the price. So given that there's a whole cluster of support zones, demand zones underneath, then I'd say the chances are pretty good that even though it may come back a little deeper in the zone, touch this one here, it's probably going to take off and push up through this 30-minute zone here. Just have a quick look on the higher time frame, see what's happening. It's really pushing into this high time frame here. So H4 similarly is pushing well into that. It's looking pretty strong at the moment. So we'll see what happens, but that will just give you some idea of what's happening when you're trading. Now up to $410 just in that little time that we've looked. So the last thing I think I want to do on this video is just to go to a very small time frame, like the minute. I wouldn't normally calculate the minute time frame zones because it does add to the processing burden on this EA. But for purposes of demonstration, I'm just going to tell it to start calculating the 1 minute zones. And what I'll do is I'll change it to 1 minute and the 30 up to 30 minutes, so another high ones just to help the performance. Okay, so these H4 zones should all disappear because they won't be calculating anymore. Come down to H1 shouldn't be there, but M30 should be. There we go. Go down to the M15, M5, and M1. I thought it was just worth having a quick look at this because it moves quite quickly. It's a really good way of showing you exactly how price behaves as it approaches these zones. Here you can see that price is approaching zone and it's really struggling to get through that layer because you have these excess orders. It's not to say it won't push through. In this particular instance we've got actually overlapping zones. We've got supply zone here and we've got demand zone here. So what's really going to happen in the end is probably going to be determined by the higher time frame and what's going on there. So we'll have a quick look at the 5 minute and see what's going on there. So there's a very definite uptrend there, so chances are that 1 minute supply zone is going to be broken fairly soon. But you can still nevertheless see the difficulty it's having doing that. And it has pushed through that zone now. That should be fresh very soon to show that it's a stop down zone. Let's change up to 5. There might be a better one to use so that you can actually see where the zones aren't quite so clustered together, and that might give a better idea. So what I'm going to do is go to the pound in this instance, see if that gives anything better. Demo, no criteria. It's my standard template, no counters applied. going to calculate the 1 minute zones. Up to 30. Okay. We calculate the zones. These ones should disappear. We're going to the 1 minute. So here you can see that price actually pushed into these overlapping supply zones here. You see there's a little bit of hesitation there. Often what happens is it will go deep into a first zone until it hits an overlapping second zone. That's where you've got the second layer of order. Some of the orders were being taken out by this first layer of orders, some will be taken out by this second layer of orders, so that's a much higher probability zone. You see that price is trying hard to get through. There's quite a lot of momentum here. Got quite a lot of new entrants, buyers coming into the market, try and push price through. So, but I think we'll probably see a little bit more retracement from there. And so if you'd have entered in this zone at the top here, then there's an opportunity to get some profit even on a counter trend trade. Oh, there it goes, it's dropped right down. So we instantly get 1-to-1 even if entered on this layer here. So if you're doing scalping, I guess you could use it for scalping. Personally, I don't. I think it's better for the swing trading or even the longer term trading, holding at least for a few days. But that's one of the good things about this method of trading. It can be used for any time frame you want, whether it's intraday, whether it's long term, even the weekly charts. You can use it fully manual. You can use it fully automated. There's a lot of flexibility in how you can do it. You can develop your own strategies. Here you can see that price is dropping away from these zones quite nicely now. So you're probably up to about 2-to-1 down here. So risk $50, make $100. That's the kind of money I like to make. So I think that probably gives a pretty good idea of what this expert advisor, zone trader, is capable of. And I think on that note, I am going to leave you, and hopefully we'll see you again in the next video. Cheers.